Hello ladies and gentlemen, welcome to the Beat of Business, and in this video I'm going to discuss the 4 key signals that indicate that a housing crash is on the horizon. But crash or not, I do think that a correction is going to happen due to these 4 key signals. The first key signal is that housing prices are softening around the nation. The second key signal is that housing supply is actually expected to pick up in the coming months. The third key signal is that consumer confidence and builder confidence in the housing market is actually declining. And the fourth key signal, which should be no surprise to anyone, is that interest rates are increasing. Now, for each one of these signals, I do have some concrete data points that I want to share with you all. So if you appreciate all the research that I've done for this video, please go ahead and hit that like button, and please consider subscribing to my YouTube channel, The Beat of Business. As I was doing research for this video, I came across a lot of articles like this one on Fortune.com. According to Redfin, 12% of homes on its site saw sellers cut prices in the week ending April 9th, and that was the biggest one-month spike seen on Redfin since 2015. Additionally, there was also a 3% drop over the past month in home tour requests, which is also a signal that interest and demand in homes is softening. Then there's this article in TheStreet.com where, according to the Mortgage Bankers Association, mortgage applications actually dropped 8.3% in the week ending April 22nd from a week earlier, which is the lowest level in more than 3 years. Additionally, refinancing applications fell 9% from the prior week and 71% from a year ago, to the lowest level since December 2018. And then we have this article in Realtor.com that outlines which cities across the country have experienced the biggest drop in home prices. Housing prices are down 18.7% in Toledo, Ohio, down 17% in Rochester, New York, down 15.4% in Detroit, Michigan, and down 13.7% in Pittsburgh, Pennsylvania, and down 5% in Tulsa, Oklahoma, and the list goes on to include Los Angeles, Memphis, Chicago, and Richmond, Virginia, all experiencing a decrease in home prices of 3% or more over the past year. And this list just shows the top 10 cities with the biggest drop in real estate prices. The fact of the matter is that prices are generally trending lower across the country. Now, there is no question that interest rates have a lot to do with this, but we will cover that later on in this video. The second key signal indicating that a housing crash or a housing correction may be on the horizon is that the supply for homes is actually expected to increase. Back in 2020, we entered a shutdown due to the pandemic, and the thought was that since we are in a lockdown, people would not buy homes. Instead, the opposite actually occurred as people started to take advantage of historically low interest rates, and there was a need for more space as the work-from-home environment grew. Not only did demand for homes increase, there were bidding wars across the nation for homes, and people were willing to forego any pre-purchase inspections that are intended to protect them financially. On top of that, we had supply chain disruptions and a shortage of materials, which meant that homes weren't being built fast enough to keep up with demand. So when you factor in supply chain shortages and you couple this with rising interest rates, that means that home affordability has not been this bad since 2006, when rates were at 6.75%. According to CNBC, if rates were to rise just 50 basis points more, or home prices were to rise just 5% more, home affordability would be the worst on record. But there could be some good news on this front. Many economists, including Zillow senior economist Jeff Tucker, predict that there should be a bump in listings by late summer or early fall that buyers could look forward to. Len Kifer, deputy chief economist at Freddie Mac, anticipates a much more seasonal pattern for the housing market this year, with people listing in the spring in hopes of selling their home in the summer. But with interest rates being where they are, the homes that don't sell through the summer will sit on the market, and that's when we will see inventory pick up. Now, inventory really isn't going to get back to normal anytime soon, but it's trending in the right direction, with 74% of industry experts believing that the market will get back to pre-pandemic inventory levels by 2024. The third key signal indicating that a housing crash may be on the horizon is that consumer confidence in the housing market is declining. I personally don't think that this is a big secret. There are a lot of people, whether it be the general public or economists that actually cover the real estate market, that think a real estate crash or a correction is on the horizon. And if we look at the National Association of Home Builders Monthly Confidence Index, it fell 2 points to a monthly reading of 77 in April, which is the lowest level since September of 2021. Essentially, this number means that home builders feel less confident about traffic from prospective buyers than they have over the past 6 months. But a bigger indicator of consumer sentiment is Fannie Mae's National Housing Survey. And in this survey, the Home Purchase Sentiment Index decreased 2.1 points to 73.2 in March, as consumers continue to express pessimism regarding the trajectory of mortgage rates and home buying conditions in general. The quote, good time to buy component of the index reached a record low, with only 24% of consumers believing that right now is a good time to buy a home. Again, ladies and gentlemen, these numbers are just indicators that really try to gauge the sentiment of people around the nation, particularly the sentiment of people who actively participate in the real estate market. But even if we don't use these formal indices that I've mentioned in this video, I think it's pretty clear that most people think that the housing market is overpriced. When I talk to my family, or when I talk to my friends, and when I talk to people who actually work in the real estate industry, I would say that for the most part, there is an overall sentiment that the real estate market is due for a correction of some sort. And the fourth key signal that a housing market is due for a correction is interest rates. Yesterday, on May 2nd, 2022, mortgage rates actually fell to 5.25%, down from 5.375%. But even though mortgage rates fell week over week, they are still much higher than they were just a few short months ago. Just last April, the 30-year mortgage rate averaged around 3.14%, and just a month ago, rates were still below 5%. But even though mortgage rates are the highest they've been in years, it just so happens to be spring, and spring is when people buy homes. And for this reason, most experts believe that the housing slowdown may not happen until the second half of 2022, after the summer season ends and the seasonal demand for homes tapers off. But I'm very curious to see how new home sales will be impacted by rising interest rates. I think there's no question that it will impact the housing market, but I'm just curious to see how much it impacts the housing market. And just to show you guys how much interest rates actually affect your mortgage payment, I went to Google and I'm just going to use their simple mortgage interest rate calculator. Now, let's say you had a mortgage loan amount of $500,000. And let's assume that you have an interest rate of 5.25%. And as you can see, the monthly payment would be $2,761 if you have a loan amount of $500,000. Now, just a year ago, interest rates were hovering around 3%. So let's just say you got an interest rate of 3.1%, and let's see how that impacts the monthly payment. And there you have it. Your monthly payment just a year ago on the same amount would have been $2,135. I've also been reading that many people are actually opting for adjustable rate mortgages in this high rate environment, but we will deep dive into that in a different video. But I am curious to hear all of your thoughts. Do you guys think that home prices and home demand will be impacted by rising interest rates? Or do you think that the housing market will continue its bull run simply due to the fact that there is such a low supply of homes out there right now? Ladies and gentlemen, I wanted to make this video to highlight the 4 key signals that I think will impact the housing market going forward. I don't think that the housing market is going to crash or correct in the next couple of months. I do think that it will happen towards the latter end of 2022 after the seasonal demand for homes wanes off. But as I mentioned in this video, prices for homes are already starting to go down in certain markets across the country. And even when I look at our local market here in Seattle, I'm noticing that some homes are on the market a little longer than they were at this time last year. And not only are they on the market a little longer, I'm also noticing that many homes are being discounted, and that was definitely something you didn't see in the recent past. But I would love to hear what all of you think. I've shared my thoughts on the housing market, but I'd love to hear whether you think the housing market is in for a correction, or do you think that this historic bull run will continue? And with that, I'm going to call it a video. Thank you all for watching. I will see you all next time.